Hi, welcome again. I'm Tracel, real estate agent here in Wilmington, North Carolina. And I'm joined today by Travis Lloyd, good friend with Homeside. And I asked Travis to join us for this session to talk about a type of mortgage product that may help if you're trying to preserve your liquid assets. So we had our estate attorney talking last week about how to preserve some of those assets, and Travis's company has a different type of mortgage product that I thought would be of benefit to learn about. So Travis, if you could tell us a little bit about it.
Well, I actually have 100% financing available for up to $1 million. Believe it or not, it is back, and it can really help some of your net worth asset-based clients.
Yes.
And so where I see this product being really utilized would be someone, say they're moving from Connecticut or New Jersey or New York down here to Wilmington, and they want to take their time in the move, not quite sell their home.
Okay.
Well, they're going to have some equity in their home.
Correct.
And that equity within their home can either be tapped through a home equity line of credit against their current home.
Which is the normal way that I would find many clients that will do it. They'll take a line of equity out.
And that's one way to do it. However, it puts a lot of onus on the client to go through the process, get approved through a different bank. Whereas Homeside decided, hey, well, let's have them take the home equity line of credit on the home they're going to buy here.
Okay.
So what we do is we have an 80% first and a 20% interest only second.
Okay.
When you sell your home up north, or you decide to take funds out of your retirement account, or however you want to make that happen, you can pay off that interest only second at any time.
Okay.
Now the first for the 80% is on a 5-5 arm. Now, if you're unfamiliar with ARMs, you may or may not have heard some horror stories in the past about it.
So I won't jump in to interrupt you, because yes, probably a lot of people that are listening to the video, you hear the word ARM, and like me, my pulse races a little bit, but this is a little bit different than other ARMs that are available currently on the market. Explain.
That's correct. So on this program, it's a 5-5 ARM, which means it's a fixed interest rate for 5 years. Then it has the ability to adjust, and then it's fixed again for another 5 years.
Okay.
So what this does is it provides a much more secure and stable ARM rate mortgage than what was back in the past and made everything kind of blow up.
Yes. Because, like I said, you hear the word ARM and you think, that's what got us into this mess. But no, this is a very specific product that, as you said, will adjust after the 5 years and then adjust one more time after the second 5-year period.
And on top of that, statistics show over 70% of people will either sell or refinance their home within the first 10 years. So on this program, you're only going to go through one adjustment period within that first 10-year period. And with those statistical probabilities, you can always come back to me, refinance it. If you sell your home up north, want to pay everything off, you have the ability to do so.
Okay.
There's no prepayment penalties on anything involved with the transaction.
Fantastic. So I'm going to repeat this back to you just to make sure I understand, and that way people watching will understand as well. If I'm looking to purchase, say, an $800,000 home, and I have equity in my home, say in New York, say I'm moving from Albany, New York, I can come down, I can sell my house up there, come down here, get an 80-20, where I'm paying, for the 20, it's all interest only, but once I sell my house up there, I'm probably gonna pay that 20% off. So we're talking about a year to 2 years, I'm probably paying that off. And this helps people that are looking to make that move. Maybe they're planning retirement, so they're 3 years out, maybe 2 years out. They can buy their beach home now while prices are good before they rise and interest rates go up, and then they can transfer that equity.
That's correct.
Am I understanding that right?
That's absolutely correct. And a lot of times, another thing people like to do is take funds from their 401ks or their IRAs for down payments. Well,
Please don't do that, people.
Well, we all know the markets are doing really well right now. So let your house make the money for you.
Yes.
And keep your money in the markets, and then whenever you decide that you want to pay down or pay off that mortgage, you can do so.
Fantastic. Well, Travis, thank you so much for joining us today. If you have any questions, I'm going to put Travis's contact information in the comment section below the video. Please reach out and talk to him. He has many other products, but this one I just thought was really interesting to share with everyone. Thanks so much for your time, Travis.
Thank you for having me. You take care.
Bye.